Hi everyone, welcome to my YouTube channel The Mighty Bull. In this video I'm going to give you some updates regarding the market. As you see, this is the first chart that I am going to explain, that is the broader market itself. The blue line you are seeing is the 50 EMA. I usually use exponential moving average than SMA. And if you remember, 2 months back I had posted a video that Nifty is actually in a good structure, only that it is forming a cup and handle pattern. That played out really well, but what happened is it failed to reach into the all-time high zone. Okay, exactly at this region, this is the all-time high zone. I had marked two resistance on the day, and you can see that Nifty really struggles to go beyond this all-time high zone. If you see here, you can see this is first resistant, and then second time it tried to broke out, failed. Third time it tried to broke out, failed. And then finally, after a swing down, it attempted to move higher with unexpected gap up around 4 to 5%, which is really rare in Nifty. That happened very rarely in the past. Okay, so this was exactly on the day of US India tariff announcement, and that day the price really gapped up. Okay, everything was going on well. You can see a superb gap up, but usually whenever a gap happens, if this candle was like this, instead of going down, if the candle was like this, then this could have been a beautiful candle and would have confirmed that the news was actually good. But what happened was the exact reverse. The price started to go down and closed at the close of the day, right? So this is the weak candle with huge volume. Even though some buying would have happened, I don't know, this is a weak candle, and later after this it formed a pivot over this zone. If you see, you can see a small pivot that has formed over this zone, and the stock started to trend again, and this pivot has been taken out on Friday, that is the February 13th. And with 2 points you have to notice: one, the broader market gapped down below the 50-day moving average. You can see the gap down below the 50-day moving average, and if you zoom in, you can see how beautifully the volume has expanded as the price started to come down. Can you see this? Each day as the price starts to come down, the volume has increased a lot. This is nothing but follow through on the downside, which is never a good sign for the broader market, right? Also, the gap down below 50 DMA is always viewed by me as heavily negative, so it will take some more time, even months, I think. But because there is no proper structure in the market, this structure will take time to develop. So it is not the time to go aggressive. You have to be very defensive till the stock market proves you wrong. Yes, of course, there is a chance that the market can come a little bit down, and then it can start to move higher and higher. But what is the probability? The probability is very low. That is what I'm saying. So if you see the weekly chart of Nifty, where is the support zone? This is a weekly 50 weekly moving average. You can neglect it. I am not changing the settings now, because we are mostly doing all our examinations or analysis in daily chart only. So if you see in weekly chart, this is a strong zone where it can find the support. Till this zone is breached, okay, till this zone is breached, you can expect that the Nifty is in up move. If this pivot is taken out, then even in long term, the broader market has gone into a lower low structure. That is what I feel. So we have to see how the price reacts in this region, and this candle was really good actually in weekly time frame. If you see, this is really good, but exactly it has taken a beating at the all-time high zone, you can see here, and then a long wick was formed, and now the market is tracing down, and it has closed at the week's low. There was not even a smaller tail that is getting formed on the weekly candle. So it is highly negative, but we have to wait how the next week pans out. Okay, suppose it is highly possible that the broader market can form a candle like this, a doji here, and then the market can move up, or it can test this zone again and it can shake out a little and then it can move up. Okay, but there are chances that the market will move higher in quite down 1 or 2 months, I think, because I will tell you why in the end of this video. Before that, I would like to talk something about the sectors that are that you should completely avoid in this market, because the market is extremely thin. The market breadth is also very poor. Only just 20 to 25% of the stocks are above the 200-day moving average, and 30 to 40% stocks are above the 50-day moving average. This is never a good sign. Okay, so I will talk about the sectors now. The first sector you should avoid is the IT sector. Can you see how damaged the structure is? Actually, I thought a turnaround for this sector. I was looking this sector closely, because after this down move, the stock was forming a beautiful base here, and when this breakout happened in this zone, when this breakout happened with volumes coming in and RS becoming positive, I thought the Nifty sector will give a good run up. But what happened was, after that trade deal, Anthropic news came, and once the news came out, the sector started to fall heavily, and you can see all the IT stocks also beaten up a lot. If you see Eclairx or if you see any other stock also, it is beaten up a lot. Okay, if you see in the weekly time frame, the sector is just testing this superb resistance zone. Have you seen here? This is the first time it formed a pivot over here, and then second time it is forming the pivot exactly over here, and you can see the third time a beautiful tail is forming over here at the same zone. So we have to see in the coming weeks whether Nifty IT is going to form a base over here and then starts to move up in coming weeks, or it is going to go down. We have to see it. But when I see the relative strength, it has severely beaten up. So, and also you can see the volume in the weekly chart is also heavy on the down week. So I would completely avoid this sector. I would never trade this sector, at least till this sector proves otherwise. So next is MSIT telecom sector, similar structure, similar to IT. I will avoid FMCG, very poor structure. You can see the trending, downtrending, relative strength. This is relative strength. For who or new to my channel, I had made a video on Stan Weinstein, how to use this relative strength, what relative strength I use. Everything had listed in that Stan Weinstein playlist. You can go to my playlist and check it out. And this is here I am using 90-day relative strength. The reason is because I am checking for a quarter, say 3 months, and because now the time is not conducive for long term playing. Either if you are taking trade, you have to be a little short to mid term, because long term the things have not are not yet ready, because most of the sectors are patent on. I am now not looking into long term. Doesn't mean that you should not look into long term. What I mean is, I am not looking into long term. I am looking for a shorter or medium term trades only. So that's why I am using a 90-day RS line here. You can see the FMCG below, trending below 50 DMA, and downtrending RS line. And you can see Nifty IPO is also a little bit poor. I won't track it through. The RS seems to be improving, but this IPO sector has to form a base over here and then come above the 50 DMA, and the 50 DMA, when it turns up, I may look into this sector. And then this is Pharma is very dicey. There is no structure at all. Can you see the choppy structure? Completely I should I will never trade anything from Pharma, and I think if you are very interested, you can see some stocks out there, but I don't think this is useful. This is a mark I had made in September 25, you can see the gap down below 50 DMA. See, whenever the gap down occurs below the 50 DMA, it tells you something. You can see the volume getting increased and RS line becoming negative. So what does it mean is, whenever a gap down occurs before the 50 DMA, it means the sector or the stock is not going to perform in near future. That is why I am worried about the gap down that has happened in Nifty even day before yesterday, right? So this is what I'm telling about. So pharma will avoid. Then reality, gap down below 50 DMA, rising volume, negative zone. RS media I will avoid, even though the RS is showing some strength. See the downtrend of media. Do you think just because it has crossed the 50 DMA the stock is going to perform? No, it has to form a base. If there is no base, if it is showing a V-shaped recovery, most probably what will happen is it will capture some bias here and there, and then it will make a down move then. So you should be very careful when trading structures like this which are in downtrend for a longer period of time. And then consumption is also poor, I will avoid. Nifty India tourism I will avoid. And now I am going to tell you some of the structures which are showing promising trend, but I don't know how it will play out. You can see the first is the CNS energy. Can you see the base that is getting formed here? Beautiful base. After a down move of 50 DMA, the store now the 50 DMA is in just flat, right? And you can see the RS has given a new breakout. It is almost going into higher high structure, so I may consider this sector. And then Nifty capital market is good. It's trading near the all-time high, well above the 50 DMA, and RS is also positive. I like this structure. And Nifty consumer durable, yes, good structure because the RS is becoming positive. There was when the Nifty showed a gap down, the reverse is also true for Nifty consumer durable. Can you see the gap up above the 50 DMA with huge volume and RS getting turned up into the positive zone? This is a good sign, but don't jump into trades now. You have to look into the stocks that are present within this sector. How you do it? You can go to niftyindices.com and then search for indices, and then you can go to thematic indices, and here you can search for Nifty. Sorry, give me a second. You can search for the sectors and you can do it. See here, sectoral indices, you can see the Nifty consumer durables, and when you come down you will be able to see the constituents. Okay, this is what it is. Okay, you can look into some of the stocks, and if you feel that it is better, you can take some trades, but with proper position sizing and risk management. That is the key here. This is not the time to be aggressive. I am repeating this point again and again because there is literally no trades there. Even if you take some trades, you have to just do a probing trades. Okay, you have to take very minor positions and have to see how your portfolio is performing, right? EV sector is okay, but auto sector and EV sector move together. So if the auto sector is going to perform, this will perform, otherwise no. This is okay sector. Nifty India defense, this is a beautiful base that is getting formed out. You should definitely keep an eye over it. Can you see how beautifully the move was here, from here to here? Can you see the beautiful move? After this there was a small downtrend, or you can call it a stage 4. Now the stock is in broader stage 1 structure. Once the sector breaks here with a good candle, and RS reaching into newer high like this, okay, then this is the time I will look into the stocks. I will the stocks in this sector is already in my radar. If the stock is moving, if I feel the stock is moving before the sector, I will take trade. I might take trade in that also, because usually the winners of a sector move before the sector itself, right? So you should keep this in mind. This is a beautiful sector in my mind. The defense move is not yet over. It is beautifully setting up for the next move. Okay, so keep in radar. Next thing, healthcare, I don't see anything here. Oil and gas, okay structure, there is nothing much to tell. And now I am going to show you the sectors which are the beautifully strongest sectors in this market. You can see the finance, it is trading at the all-time high, well above the 50-day moving average, and the RS running up. Okay, finance is a beautiful sector. And see the metal, this was a heavy shakeout. Most of the people who came here would have been shaken out. This is what happens when the move occurs in a very rapid manner. Can you see from here to here, the move was tremendous. Even if you see, the gold rate was going up and up, and silver also going up and up, and everybody were in a frenzy to buy those things. Always remember, guys, if you want to be a better trader, trade when nobody knows what's happening. That is the thing I had learned in my trading journey. You should not go into a structure when it has given a move like this. You should have been here. There was a lot of chances. If you go and see, the gold gave a lot of chances. At least you should have gotten here. Okay, once the breakout happened above the high, when it tested, can you see, this was the high, and after breaking out, the the sector tested out here, and then it gave a gap up above the 50-day moving average. Kindly pay attention here. These price actions keep on repeating. It is just, you have to be a little bit more aware what is happening in the market. Can you see the metals showed a significant strength over here? It was in December 12, and then you see what happened to stocks like Hindustan Zinc, Hindustan Copper, or any other stock. But however, I didn't trade those stocks because I felt that market was not in a right place. Okay, so that's okay for me because I had a couple of good trades then and there, but mostly I was sitting idle. Okay, there was nothing much for me to trade in this market. Metals are very strong, well above the 50-day moving average, and RS is superbly positioned. But you have to wait for the structure to form. You should not, you can't just go and enter here. Okay, you have to wait for the stock to settle down. At least let it come down again and form a beautiful base here, and then let it break out. That is what you want. Once it breaks this range, you can look for the stocks in this sector. Next is PSU banks. You can see how many PSU banks are setting up beautifully. You have to wait for the structures. Okay, can you see here what was the after this move, the stock came down here and it formed a small range over here. This is the time when you should have picked up, even if you want to try. Okay, but don't go and pick any stocks here. The sector will definitely come down. It has to cool down. Of course, this is strong, but doesn't mean that it will keep on going up tomorrow and day after tomorrow. Right? Be patient. That is where your success lies. And the PSE sector is also a good sector. Why? Because can you see this huge candle with 5% move on this day, with RS reaching the all-time high, and the stock is consolidating well above the 50-day moving average, and the RS is staying high. Okay, it's forming a high tight flag like of structure in the all-time highs region. Okay, can you see? The PSE sector is at an all-time high in terms of RS, relative strength. However, it is not trading near to the all-time high zone of the price. The stock is well below the all-time high. But if you see here, after this stage 4, it has formed a beautiful stage 1 here, and it has given a breakout here. Now it is consolidating. Look for the stocks in this PSE sectors. Nifty Private Bank is also doing good, well above the 50-day moving average, and RS is okay, not superb as compared to metal or finance or PSC, but it is somehow better. It's flat almost. Okay, Bank Nifty is also good, well above the 50-day moving average, trading near the all-time high zone, and RS in the positive zone. You can look into it. Some of the stocks are setting up in banks, and Nifty Housing is beautiful structure. Can you see how this structure is playing near the almost at the all-time high zone? And see the RS line. This is what I say. See the RS line. The RS line is almost trending higher and higher, and it is well above its all-time high zone. But give time for cooling off. Okay, don't go and trade here. Let it form, let it pull back and then form a small structure over here, and then you can go off. Okay, or it form a flag over here, then that is the time when you should look into the stocks. Auto is okay, doing good. Nifty rural index or sector is also doing good. And then when coming to the broader index, let me tell few points about the broader index. See, this is a small cap 100, and from its all-time high, the small cap 100 is trading well below its 50-day moving average, and you can see the gap down that happened below the 50-day moving average, similar to that of Nifty. But this market is a little bit confusing. Why confusing I say is, Nifty is trading below 50-day moving average with gap down, and small cap is also doing the same. But the next chart I'm going to show you is Nifty mid cap. Can you see the mid cap? What do you see here? The mid cap is trading near the 50-day moving average. This is a little bit confusing because usually what happens is, if Nifty and Nifty small cap is doing bad, Nifty mid cap should also do bad. But technically, the more stronger is Nifty mid cap than the Nifty itself. That is a little bit quite surprising to me, because Nifty small cap is performing poor. If you see the Nifty micro cap, total market is doing poor, below the 50-day moving average. And if you see micro cap is in it, trending low row structures. But see this Nifty micro cap and Nifty mid cap, there is a lot of quite a difference over here, right? This is small cap, this is mid cap. Can you see the mid cap is almost trading near the all-time high zone, while the structure of Nifty 50 is also not good, but small cap is also not good, but mid cap is somehow okay. So it is a little confusing. It just means that only small pockets of the market is moving. Not everything is moving, only small pockets are moving out there. Understand? Fine. Next is coming to the VIX. VIX is the volatility index. Whenever the volatility goes up, you will feel that Nifty performs poor. Okay, you can see when this period was there from April 7th. This was the day when the low of Nifty happened. If you go and see April 7th, this is the time when the low of the Nifty happened, and this is the time when VIX peaked. Okay, after the peak, in the next couple of months, the VIX started to trend lower while the market went up. Okay, till here it was going down. Now what has happened is, VIX is clearly rising and it starts to form big bullish candles out there. This is not a good sign actually, and VIX trading above 50-day moving average with bullish candle and RS starting to rise again is not a good sign. We have to wait over the next couple of days or weeks. Always take one candle per day, right? Just because I am telling that VIX has risen, it doesn't mean that the market has to go more down tomorrow. The reverse can happen, or we might be at the end of the bottom also. So always take one candle per day. This candle tells me that the market is weak. Not only this candle, the gap down below 50 DMA of Nifty 50 tells me that the market is really weak. Okay. If I am proven wrong, I will accordingly adjust my positions, and then I will take what position I have to take that I know. But it will come with experience for you. You just watch the market day by day. That is what I will suggest if you are a new beginner or whatever it is. And then I would like to tell a few points about gold. I would like to show you the weekly chart of gold. Okay, what has happened in gold is phenomenal. Okay, where you see the base here, see the stock is moving up, and you can see the relative strength line is also going up and up. But where you see the base was formed before this up move started, this is stage 2, right? As per Stan Weinstein, the stock is performing in stage 2. But where was the stage 1? If you go back, you can see this is the time. Okay, after in September 2020 to Feb 2023, 3 years it did nothing. The base was getting formed here. This is the weekly chart, and finally the stock broke out on this day. The gold broke out on this day, and then it retested once here. You can see the retesting happened, This is a beautiful price action. It happens all the time. That's it, friends. You just have to make sure that you are doing it properly. Even if you don't enter here, you can enter here, right? When the breakouts are becoming conforming, you can see. So this is the base that was formed here. Okay, after this base, the stock went. Sorry, this gold started to perform in tremendous manner which nobody has thought of. Okay, so after this tremendous stage 2, what is going to happen? You just think of what is going to happen when the gold performs this much better. Usually there is a negative correlation between the gold and Nifty, when equity. So when the people have uh, uncertainty over the governments, uncertainty over the fiat money. By fiat money, what I mean is this printed money, right? Like rupees, dollars. These are printed money. They rely on more stable income. So they think that gold is God's money. So they would want to invest in gold. Okay, when there is lesser trust with the government, usually this happens. Even during the time of COVID, what happened? People were uncertain what is going to happen to the economy. Then they started to pile up gold, right? After COVID run up, what happened? After COVID run up, it formed a base for next 3 years, and now this has happened. Once this has happened, what is going to happen? Very easy. It may go for a little higher and then trap a lot of buyers, and what will happen is it will start to form a stage here, right? It is going to form a stage here. It's going to come down, do this for next couple of months or years. I don't know really. Also, I don't know whether this is the top. It may go a little higher. Even here also it may go, but one point of time this run is going to end, right? That is what I am trying to say. This run is not going to continue, guys. This run has to come to a halt. That is how the market works. The market is wavy. Okay, by Stan Weinstein theory or Wyckoff theory, what will happen? The stage 2 has to enter into stage 3, and stage 3 has to go into stage 4, and then it has to form a base stage 1, and then only the stage 2 will occur. If you are planning to buy gold now, this is not the right time, but definitely if you are a systematic investor, then you can consult with your financial advisor and you can start accumulating some part of your money into the gold, because but you should also be ready to see no returns or very minimal returns in the next coming years, because the gold has given a fantastic return. If from this breakout, if you see, it has given almost 200%, I think. Let me see. Yes, see this, it's almost 206%. So what are you expecting after a 200% move? A small breather will be there, right? So plan accordingly. So what will happen when the gold starts to consolidate? When the gold starts to consolidate, usually not always, there are occurrences when equity and gold also consolidate a lot, but this time if you see, when the gold was moving from here to here, Nifty or equity didn't perform better, right? So most probably when this settles down, equity will pick up. That is what I expect the market to do. We will see what happens. And I will also like to show you one thing, that is Nifty versus XAU NRG. Okay, this is a ratio chart. Just a minute. If you see the ratio chart, just a minute, hang on. Yes, this is what I was talking about. This is Nifty and divided by gold. That is a ratio chart. If you see the ratio chart, and this is a 1 month chart what I am showing you, you can see this ratio chart shows that this is in a very crucial zone. Can you see this support line? This is from 2002. The data is recorded in 2002. It came near this zone, and then Nifty rallied, and then it came down in 2009, and then a rally, and it took support in 2012, and then a rally, and it came near to the zone in March 2020 COVID time, and then it took a rally. Now the gold is in a very Nifty versus gold ratio chart is in a very crucial zone. So if the history has to repeat, what is going to happen is the stock or the equity is going to do this. When this happens, the equity will start moving up. That is what I expect. We will wait for it, guys, and thanks for watching the video for till this time. And if you want to trade something, I would suggest you to trade with very minimal position, or suppose if you are investing 1 lakh in a trade, I would suggest you to invest just 10,000. Or what you can do is, instead of taking 3 to 5 positions, if you are taking 5 to 10 positions on an average, when you are deploying money, you can just take one position with full amount. For example, if you have 10 lakhs and you usually buy 10 stocks worth of 1 lakh each, now instead of buying into 10 stocks, just buy one stock worth of 1 lakh. So by that way, you are reducing your position size, but at the same time, if the trade works, you will be making good money also. This is a very beautiful concept what I do in my trading journey. I don't take all the positions. Only if my first position works and I book some profit, I start to take second position, provided when the market is choppy like this one, right? I hope this point is clear. If you have any doubts, you can comment in the comment section. I will definitely answer for you guys. And happy trading. Be safe, because this time is not to be aggressive. This time is for sit out. Money saved is money earned. Bye.